Welcome to the Kendra Nicole Podcast, the podcast where we dive deep into the world of business and entrepreneurship, sprinkled with a touch of motherhood, chaos, and wisdom. I'm your host, Kendra James Anderson. With over 20 years of experience in the business arena and nearly a decade as a full-time entrepreneur, I've witnessed the ebbs and flows of the corporate world and the entrepreneurial landscape. But that's not all. I also navigate the beautiful chaos of being a wife and a mom to a lively toddler. So whether you're a seasoned entrepreneur looking for fresh ideas or just getting started on your entrepreneurial path, this podcast is your resource for valuable insights, motivation, and practical tips. So grab your notepads and let's embark on a journey to success. This is the Kendra Nicole Podcast, where business is our focus, but we also appreciate the beautiful mess of motherhood. Let's get started. Hey guys, it's Kendra. Welcome to another episode of the Kendra Nicole Podcast. I am going to be talking to you about debt today, all things debt. So excited about that topic. I will go ahead and let you know in advance that this is another one of those unplugged, or I guess unscripted podcast episodes. I literally just dropped my son off at school. I popped into my home office and said, I'm going to record this episode right now. I don't fully script out my podcast, but I usually do have an outline to ensure that I am covering all the topics and that I don't leave anything out. But I also realized that the creation of that outline takes so much time, and it delays me just getting the information to you. So at the end of the day, if there's something that I leave out or forget, I can just include it in another episode. So it's all good. I do like this format as well because things pop in my head that don't come into my head when I'm creating the outline. And I just want to give it to you how it is. But I will say that also means that sometimes I might be a little, over here and then a little over here. So just go with the flow. Okay. Go with the flow. And of course, if you do have any specific questions regarding debt or anything, shoot us a note at info@thefinancefem.com or info@kendranicole.co. Or feel free to, hop on IG and send over a DM as well. But the DMs get, caught in that whole filter situation. So half the time we don't see them until way later. So just shoot us an email. With that being said, let's hop into this debt topic. Now, I know debt is one of those things where there are a lot of folks that are actually in finance, and a lot of folks who actually are not in finance that have very strong opinions about debt that are actually telling you how you should use debt. And that's fine, and I'm going to give you my thoughts on it, but I also am going to preface this by saying that there is no one size fits all approach regarding debt. Like, there's really no one size fits all approach probably about anything in life, but debt is definitely one of those things because how you use it matters. How you, meaning like literally how you're going to use the money matters. How you mentally think about debt matters. How your financial situation personally and potentially in business, if you're using it in business, how that matters, how the economics of your life, like all of those things matter to the conversation of debt with you in your particular household, in your particular mind. So there is no one size fits all approach, but there are some things that you fundamentally should know about debt to be able to make that informed decision for yourself on whether you should use it, how you should use it, how much you should use, whatever. So I'll say that there are some folks, Dave Ramsey, that will say very, what's the word I'm looking for? Like very, this is what it is, fact kind of statements like all debt is bad debt. And again, that doesn't make sense because everyone's situation is different. And that comes with the assumption that all debt is bad debt thought comes with the assumption that you are living in excess of money, that you have more than enough money coming in to be able to do things like buy a rental property or pay off your home early or start a business. And that's just not the reality for a lot of folks. where they're living day to day, paycheck to paycheck. There is no excess. There's not even really enough sometimes to just cover what their actual expenses are. And that is not a debt problem. That is a money problem, a money management problem, whether it's not enough income coming in or too much expenses going out. That is not a debt problem. Debt does not fix that. So I will say that debt does not fix that problem. If you are bringing in, as an example, $5,000 a month in income, whether that's business, W-2 from your job, whatever, you're bringing in $5,000 into your household and you're spending $6,000 out of your household on a monthly basis, that $1,000 gap does not get fixed by debt. That is not a debt problem. That is a money management problem. And I don't say money management meaning that you are doing something wrong, that you're mismanaging your money, but money management in a sense of there's something there where either you need to bring in more income or expenses need to go down. That's the solution to fix that, which is a whole different topic. If you want me to talk about it, let me know. But that's what that is. Debt does not fix that solution. Because what will end up happening is you're really just delaying the issue. If you then go and buy or get a $10,000 credit card and put $1,000 a month on your credit card in order to fix that gap, that credit card of $10,000 can cover you for 10 months, filling that gap for $1,000 over 10 months, but you still have to pay off that credit card. That debt is still there. That's not creating more money for you to fix the $1,000 gap. That's not reducing your expenses to fix the $1,000 gap. In fact, it's actually causing you to have more expenses because you have to pay back that credit card. So that is not a debt problem. Okay. So with that being said, let's actually just talk about what is debt. Debt ultimately is just other people's money. It's other people's money. It can be a credit card. It could be a line of credit. It can be a loan, whether that's a loan from a bank, like a Chase or your local credit union, or whether that's a loan from your Aunt Sarah. It is other people's money. And there are different aspects of debt. There's obviously the amount. There is the type. So again, whether it's a loan or credit card, whatever. If there is interest, if there is a payback term, like a year, 5 years, 6 years, 10 years, whatever. So there are different components to debt. And ultimately, though, yes, you need to know what all those components are. But before you get debt, whether it's in your business or personal name, I guess this could be considered tip number one. Before you get the money, you need to have a plan for the money. Because thinking that you're going to create the plan after the money falls into your lap, I'm telling you right now, that doesn't happen. It doesn't happen, and it doesn't happen well. So if you know that you need $20,000 to do X, Y, and Z, which we'll get into that in a moment, like, do you really actually need to get a loan for that, or do you need to save for that, whatever? But let's say that you do decide to get a loan for $20,000 for whatever purpose. No, how are you going to actually leverage that $20,000 to make more than $20,000 back so that you could pay back that debt and then have the money to do whatever you originally were trying to do? Like, what's the plan to pay that money back? When are you going to start paying that money back? Have that plan in place already. Because if you don't have a plan and then $20,000 falls into your lap, suddenly you want to go get your nails done or hire somebody in your business or put more money into Facebook ads. Like, suddenly you're wanting to do these things because this money is in your lap. It's like what happens with lottery winners, right? They win $1 million. And before, when they're scratching and doing all this stuff, it's like, I just need this money to pay my bills and maybe, go on a vacation or, pay for my kids' college. That's what they're thinking when they're scratching. And then the $1 million comes and lands in their lap. And it's like, oh, I'm about to go buy this $600,000 property because I can pay for it all cash, not thinking that, okay, you got to heat that thing, you got to furnish it, you have to pay the taxes on it every year. And then 4 or 5 years later, they're broke again. Not all lottery winners, not all inheritance, folks that get inheritance, but a lot of them, because there's not a plan in place. Okay. So that was probably my first little tangent, sidebar, but it's relevant to this point, right? So have a plan. If you are going to take on any debt, have a plan for how you're going to use it. So that's one thing. But let's talk about, let's talk about the use of debt in business. So here's one thing that I'm just going to say from the start. Do not start your business by only using a loan or a credit card or money that you're getting from whoever. You need to have some skin in the game. You need to have some of your money in the pit, right? I said debt is other people's money. Don't only do this with other people's money. There's a lot of different reasons for it. Way too many to try to like tackle in an episode, but I'll talk about the financial reason here in a second. I can even give you like an example. But just don't do it. So let me hop in with that actual example. Hopefully this will help. Okay, let's say that you wanted to start a side hustle doing like Uber or something like that, right? Uber or Uber Eats, something. And you're like, I just want to, make some money on the side. I heard it's pretty decent money. I live in a nice size city, whatever reason. And I'm going to buy myself a car in order to do this. So I'm going to go get this $20,000 car. I'm going to fully finance this $20,000 car because, hey, the business is going to pay for it in time, right? So I go get LLC and I go get my $20,000 car. And let's say that the monthly payment, just to make it easy, is $500 a month for this car. The first month is doing pretty good. Let's say you bring in $600 that first month. Cool, you made $600. Well, you made $100 because $500 of that has to go back to that car loan to pay the car loan. But you made $100. Cool. You do it again another month. You make another $600. Great. $500 goes to the car loan. So now your bank account has $200 in it. Well, minus gas and other things, right? But there's some money in there. And then the third month, maybe you only do $300. Well, you still have a $500 car payment. So now you got to tap into the other $200 that you set aside, assuming that you set it aside, assuming that you didn't have gas or any other bills that you had to pay. And you pull that to pay the $500 car note. Now you actually have no cash, but you have at least made your car payment. The next month goes by, you do another $250 month. Now you don't even have enough money to pay your car payment. What do? Do you go get more debt to pay that car payment? Or do you just say, okay, this is 1 month I'm going to fall behind. I'll just take the fees, the penalties, the interest that they're going to hit me with. I'll just take it because the next month is going to be great. I'm going to do great. The next month, maybe you make $400 a month. I don't know. Or maybe you do make the $500, but because of the penalties, you actually owe more. Do you see where I'm going at here? So what's going to end up happening is if you have too many months of those falling short, they're going to repossess the car. So now they take the car. So now you really don't have a business because you can't Uber without a car. So they take the car. You have no business. You have no income coming in. But guess what you do still have? A $20,000 loan that if you don't figure out how to pay, it's going to jack up your credit. Does it make sense? Did it make sense that you started that business with 100% debt? So now let me give you another example that might resonate more with my audience. Let's say you have an e-commerce business. Maybe you sell clothes, jewelry, makeup, hair care, whatever. And this e-commerce business, let's say it's actually, you feel pretty good about it. You you get a $40,000 loan to help you buy some inventory because you need inventory to sell for e-commerce business, right? So you get $40,000 loan, you get inventory, you maybe pay some marketers to help you get your website together, whatever. You start selling. Let's say you sell pretty decent the first couple months. Cool. You have enough to pay this loan. Let's say it's $1,000 a month loan payment. You have enough to pay the loan. Cool. You're paying the loan. Well, now what happens? You're paying the loan, but now you're out of inventory because you sold your inventory. You need to buy more inventory. Did you make $40,000 to buy $40,000 more with the inventory? Or did you spend all that money on paying back the debt, plus paying your marketers, plus paying ads, plus paying your contractors, plus paying for all of these amazing photo shoots? Do you have the money for inventory? Sometimes, most times, a lot of times, no. Now you're having to get more debt to buy more inventory to sell just to cover costs. It's this like circular reference, right? And let's say that even you have this fabulous, amazing months where you're bringing in all of this money and, you can now pay for your inventory. Well, don't go do what a lot of folks go and do, which is now they overbuy, they have too much inventory. So now they have to deeply discount their product and run these 40% off flash sales, right? And that 40% is now cutting into your margin. So now the money that you're supposed to be making off of that inventory to cover your operating expenses and to cover your debt, you're now not making. You're making enough to cover just the cost of product. This is hard to explain. I need like a little whiteboard where I can like show you the actual numbers. But if you're going through this, you feel this. If this is something that you have experienced in your business where you're having to pull more debt in order to buy inventory, or whether you are having to pull more debt just to cover your operating costs because your inventory is not covering that because you've been discounting it so much, you don't need me to break out a whiteboard and to show you the numbers, because in your heart, you are feeling this and you're like, yep, I've gone through this. So don't start your business off with 100% debt. Have skin in the game. Can you leverage debt a little bit when you're starting your business? Sure. But the first step of your business is to validate your business. So while you might think that you're going to go into business and do amazingly well, and I hope and pray that you do, there's a learning curve in business that a lot of folks don't talk about. And you might not be making money like you think you're going to be making those first couple of years. So if you're already starting off 40,000 or 10,000 or 20,000 or 100,000 in the hole, it's going to take you exponentially longer to get out of the hole when you're starting off your business, because the growth rate you're not coming out of the gate making $1 million. Not happening, So don't do that. Don't start off with 100% debt. I hope those like examples helped. If not, let me know and I can think of some others. And there is a reel on my IG from probably 2022 where I actually have dollars, and I'm using dollars to show you, hey, if you sold this much, but you had to pay this much back for debt or for your cost of your product, and here's how much you're left with for your operating expenses. And I try to visually show. So definitely go back and try to find that one. Take a look at that if you think that would be helpful. But ultimately, you just don't want to start in the hole. I mean, you just don't want to do it. So now let's just talk really quickly about paying off debt. Let's say that you already have debt and you're like, okay, I already have it. Now what do I do? Maybe your business is bringing in some money and you're trying to figure out the best strategy to pay your debt. Now, I understand that some people will say, oh, there's a snowball method and there's this method. There are different methods. I'll share a couple here. But the only method that matters is the one that you're going to actually do. So I know sometimes we love to get caught up in let me understand all of my options. Let me learn phase. And we get stuck in the let me learn phase so that we don't have to do phase. But paying down debt is an action. Paying down debt is not a let me learn. Paying down debt is paying down debt. So just do it, right? I'll give you two different ways, the two main ways that people think about when they're talking about paying down debt. But ultimately, just go with the one that you're going to do. Or don't go with the strategy at all and just pay the debt. Don't worry about the strategy. But let me tell you, here are the two different ways. So one is, yes, it's the snowball method. If you have let's say two credit cards, one that's 50,000 and one that's 10,000, pay off the 10,000 first, regardless of the interest rates and terms. Pay off the 10,000 first, because you'll see that that's gone. Now it's gone. So mentally that should do something for you. But then also the money that you were then using to pay that one, you can now use to tackle the $50,000 one. So the thought is pay down your lowest balance first so that you can build up that momentum and start tackling the larger balance items. That works. Great. There's also the thought of, pay down the one that's costing you the most. So pay down the one that has the highest interest rate. So if you have, let's just say again, the same 10,000 and 2,000 or 5,000, I forgot what I said, 10,000 and 2,000, but the 10,000 is at a higher interest rate than the 2,000, then pay the 10,000 one down because it's hitting you with more interest. Well, that's true, and you can go that route too. But ultimately, again, just pay the debt, just pay the debt. And so, for some of you, that's going to be easy, right? And you're going to say, okay, great, I'm going to get out of this paused phase of trying to gather all the information, and I'm just going to put it into action and just do it. And then because I have the money, so I'm just going to pay it. But then some of you are probably thinking, well, Kendra, that sounds great, and I would love to just put this into action, but I literally am struggling in my business where I'm in that cycle, and I don't know how to get out of that cycle because I don't have enough money to pay the debt. Well, it's going to be different for everyone because different situations, like I said in the very beginning, but likely the first thing that you need to do is assess where all of your money is going. So in your business, you have to look at your expenses, and maybe for a temporary time or maybe for a longer period of time, you're going to have to cut some costs in order to have excess to accelerate this debt payment. There is no other way. Because if you continue to spend at what you're spending at, you're going to continue to have to need debt to pay your operating expenses. And that just means that the debt's going to continue to climb. So you're literally in business to pay off debt. You are not getting any of the benefits of being a business owner. You're not getting the time freedom and the mental freedom that you have because you're so stressed out about debt. That you're going to work harder, quote unquote, harder. You're going to stress yourself out. So you're not getting that time freedom and that mental freedom. You're not getting the financial benefits because you're actually not profiting anything. You're bringing yourself into the hole by accumulating more and more debt. So you're not reaping any of the benefits. And here's where it could really be a kicker. Now, this one, I don't know. This might confuse some folks. So just hear me out. Here's the real kicker. Sometimes you might have a profitable business, meaning you're actually on your profit and loss statement, you're showing a profit, which means that you will probably have a tax bill at the end of the year that you have to pay for a business that's profitable, but that you're actually not making any money on because you have so much debt. So you literally, your bank account is actually going down every single month, but your profit and loss statement is showing that you are profitable. So the IRS in your state is going to want some money from you at the end of the month, even though you don't have it because your bank account is actually going down every single month, because that's how debt works. And I'm not going to get into the weeds of it with the balance sheet and the income statement and how that all ties out from an accounting standpoint. Talk to your accountant if you don't understand that. And if your accountant can't explain it to you in a way that makes sense, hit us up because we make this very clear with our clients. So info@thefinancefem.com if you need help with that. But yeah, it happens and it sucks. It sucks if you have to pay the IRS and the state at the end of the year because you've made a profit when you actually, in fact, haven't made any money as the owner, when you are in the hole struggling. It sucks. Bad. So yeah, I don't know. I feel like I need to turn this around and end on a positive note because debt is not all bad. But I don't know if I've said this. So if I haven't, I'm repeating myself, sorry, but you need a plan. The issue, again, debt is not good or bad. How you use debt is good or bad. How you go into using debt is good or bad. Debt itself is just debt. It just is what it is. It's not good or bad. So if you don't have a plan for how you are going to pay that money back, if you don't have a very clear strategy for what you're going to do to manage debt, that it can snowball and get out of control, and then it will feel negative. And that's why there's so many like negative thoughts and connotations around debt, because a lot of people don't manage it properly or don't leverage it properly. But it doesn't have to be. It doesn't have to be at all. You can use debt to scale your business. just like you can use debt to scale your personal life. If you need an example on that, I can give it to you. I feel like I would get in the weeds if I try to go down that path right now. But if you are already operating in a smart and healthy money management way in your business, then debt can actually help accelerate the growth of your business very quickly. Only if you already have a strong financial foundation. That's it. Debt does not solve your financial problems. Debt only accelerates what you're already doing. So if you're strong and you're doing well, it can make it stronger and it can make it better. But if you're struggling and you're managing your money poorly, it's only going to go into the crapper even more, right? So debt is not a solution. It's not a fix. Debt is only going to put more gasoline on your fire, whether that's in a positive way or in a negative way. If you are a business owner that needs help understanding your numbers, understanding what that foundation is, so that before you put that fuel on the fire, you want to know, are you already going positive or are you already going negative, or you probably already feel which way you're going. But if you just need more clarity and understanding your financials, then definitely contact us. Go to thefinancefem.com, email me at info@thefinancefem.com. We have 2 very distinct service offerings for business owners, and we help our clients get clarity. The very first step is to get clarity. If you don't understand your numbers, not from an accountant or CFO perspective, it doesn't have to be super technical, but as a business owner, there are some things you have to know and that you have to be confident in. If you don't have that, hit us up. If you need help, let us know. All right, guys, I'm going to hop off here and hope that you have a great rest of your day, evening, whatever time you're listening to this podcast. Please leave us a review on whatever podcast platform you use, and share on social media. We definitely need to get this podcast out there, to share it with business owners that whether they're new or whether they're established, they just need to know these things, because we see far too often businesses that really don't have a chance because they're just financially not on a strong foundation. So wishing you a great rest of your day, and talk later. Bye, guys. Thank you for joining us on this episode of the Kendra Nicole Podcast. If you enjoyed today's episode, please consider subscribing or leaving a review. Also, share it with a friend that might find it valuable. Stay tuned for our next episode, where we'll chat about more exciting topics and feature some amazing guests. And until then, keep focusing on peace and profit. This is the Kendra Nicole Podcast signing off. Take care, and I'll catch you in the next episode.